My name is Anthony Bruno. I'm the Director of Communications here at Royalty Exchange, and this is our monthly Investor Office Hours Q&A session. Basically, the way these things work is they're rather informal. We usually start off with a certain topic that we quickly run down as a point of education for our investors, and then we basically open it up to questions. We begin by tackling the questions that were left in advance when you registered and kind of roll through those quickly first, and then we'll take any questions that you have live, obviously, on the call. The way to do that is through at the bottom of your screen in the Zoom interface here, you'll see a Q&A button. So the best way to leave your question is to select the Q&A button and then ask your question, type your question into that form. Okay, that way we can hang on to it and we can address it as we go along. I would ask that you don't do the chat feature. The chat feature is much more difficult from our end to monitor as an interface. So most likely if you're leaving questions in chat, I won't see it and I won't be able to get to it. It's the same thing with like raising your hand. That involves me having to find you and have you ask your question live, and most people don't feel comfortable doing that. So we've sort of reverted to just using the Q&A feature. So please put them there. We will get to every question that we can get to during the call. So again, my name is Anthony Bruno, Director of Communications. On the call with us today is Robert Bernard, our Chief Counsel, and we have Dayton O'Connor, who is our Senior Financial Analyst. And between the three of us, we hope to be able to answer any question that you might have. I'm also going to try to share my screen for a couple of the components of today's call. So please bear with me if I blow it with these Zoom interfaces. I usually have it, but from month to month, it kind of goes away. So when we build this Q&A session and send it out to everybody, we did mention that we were going to start with a quick overview of some changes in the music market, the music industry related to mechanical royalties and some other things. So I'm going to quickly go over that first, just for the first 5-10 minutes of the call. Then we're going to address a number of your questions, which in advance really related to a lot of this stuff already, and then we'll kind of go from there. So I'm going to go ahead and share my screen here real quick. So just bear with me 1 second, please, as I switch over. So here we go, I think. All right. Can we see the Royalty Exchange blog post here?
Looks good.
All right. Thank you, Rob. So what I want to point you guys all to today real quickly is there is a blog. If you go to the Royalty Exchange website and you look at the top menu, you see the blog component. That's what this is right here. We're on the Royalty Exchange blog. And here you'll be able to read a lot of the updates that we provide to folks. I'm going to kind of go through it real quick here for you. So first you'll see the first section of the blog is the royalty news and insights, company news, things like that. The next is a creator resources section, which is mainly aimed at folks who are selling their royalties on the platform. And then the third one is you'll see here our investor resources, which as you can probably imagine is geared towards you. So if you were to select the read more there, you will get basically all of the different components that are left for investors. And off to the right, and under the investor resources navigation menu here, you'll see guides, news, and then replays of our webinars. We may add more to it over time. So what I want to go over today real quick are the two most recent blog posts that we posted. One is what's happening with mechanical royalty rates, and the other is about the Mechanical Licensing Collective. So we're going to switch over to the MLC here first. So real quickly, there was a large omnibus bill passed several years ago called the Music Modernization Act. There was a number of different elements that included, which I won't go over in detail right now, one of which was the creation of what's called now the Mechanical Licensing Collective. Real quick, what that means is that before this, streaming services like Spotify, Apple Music, and others were sort of on their own to try to find the songwriters and publishers who were due mechanical royalty rates for streaming their music on their service. And if they couldn't find them and to pay them, they would hold their money aside until they could find them and then pay them later. Or if after a certain period of time they couldn't find them, they would just sort of distribute the money equally among everyone that they did know of based on market share. It wasn't the greatest situation in the world. There was a lot of lawsuits resulted. So one of the things that this bill did was create a body called the MLC. The MLC's job is to identify, track down, and pay everyone who is owed mechanical royalties for the music that these services stream. On the other side, the services then make an agreement, a blanket licensing agreement with the MLC, pay the MLC that blanket license, and again, the MLC goes and tracks everyone down and gets them paid. that's the upshot of it, basically. And so this blog post kind of goes over it in much greater detail. The reason we wrote it is because many folks on this call or on our platform buy assets that incorporate mechanical music royalty rates, basically. And so we wanted to say, here's how the changes and how this is being collected and distributed, and here's what it means to you. What it means to you is basically, really, you don't have to do anything different. You don't have to register with the MLC. You don't have to really do anything different than what you're doing right now. This basically changes some of the steps that have already taken place prior to you as an investor receiving your share of any mechanical royalties that you may have acquired on the Royalty Exchange platform. So there is no changes to your end. The idea, hopefully, is that it will just make the mechanical royalty collection process easier. And it may in time result in faster payments, but right now, and Rob, tell me if I'm wrong, right now, we expect that the payments for mechanical royalties will continue on the same pace as they had prior to the MLC. Is that correct?
Yeah, I think the MLC is going to pay out monthly, but the underlying distributor, so the publisher, whoever the administrator is, will probably likely still pay out at whatever intervals they've been paying before.
Exactly. Okay. And I know that a number of questions left in advance were like, what are mechanical royalties and how do they differ from performance? We're going to get into that in just a moment, but I did want to do as promised, which was kind of go over what this new law was. So if you have any more questions on that, you could always, of course, ask them as we're on the call. But I do want to point you to this blog post, which does go over it in great detail. In fact, the PR representative from the MLC emailed me after he saw this article had gone live and told me he thought it was the best summary of what they did out there. So I'm going to pat myself on the back for that one. So thanks very much. All right. So anyway, that's the MLC. Another thing that's happening is a situation that's been going on for some time now, which is actually what is the underlying rate for mechanical music royalties, specifically how streaming services pay mechanical music royalties. So a while ago, so let me take a quick step back. Mechanical royalty rates are set by a body called the Copyright Royalty Board. It's a panel of judges. They hear from streaming services. They hear from songwriters and publishers. They argue both sides what they feel a fair rate should be, and then they set the new rate. The last rate they set, it covers usually a 5-year period, and it's usually an increase, and that rate will increase incrementally year over year to equal a larger amount by the end of that 5-year period, at which point they will then reset the rates. With this particular one, it's been a little bit more contentious in that there was a rather large increase set that would cover the time frame from 2018 to 2022, which over the course of those years would have increased the streaming mechanical royalty rate by 44% over that time frame. What happened was the streaming services appealed. They said, we don't think that's fair. So they appealed it, and the appeal is going through the appeals courts, basically. What happened late last year, August 2020, is that the appeals court actually vacated part of that rate setting decision, basically not related to the amount of the rate increase, but more around the rationale behind it. And so now they're basically rewriting their order, and we're going to see what the actual rate turns out to be. We don't know where that's going to go. We expect it to be largely the same as what they originally said. There just might be some different legal language around the rationale behind it. That's sort of what we're thinking. The reason I wrote this particular article is that I was curious as to whether any streaming music services had reverted to paying the older pre-2018 rates, or if they were still paying the newer rates and hoping that they would be reduced and then maybe get some kind of refund or something after the fact. So that's a little bit it was a little bit unclear. I did some asking around through my sources within the industry, reporters who are tracking the story right now, but have not yet published anything. And they have told me that everything they've heard is that all the streaming services are paying the newer rates that they are also currently appealing. So what you're earning right now should be, if you're collecting mechanical royalty rates, you should be earning those higher. What you're earning should be reflecting those higher rates, basically, is what I'm trying to say. I think that if any streaming service were to suddenly reduce their rates to pre-2018 levels, there would be a very loud squawk from the publishers about it, and it would be headlines, and we'd see about it. So that was the point of me writing this particular post, just to kind of give you folks. There were a lot of people that had questions about, hey, I own mechanical royalties. What am I getting paid? This is the best answer we can come up with at the moment. So those are the the two blog posts that I wanted to start with right now. So, like I said, we're going to get to everyone's questions. I do want to point out two other resources for folks, because I know there are a lot of questions about these things. The first I want to point to is the Ultimate Guide to Buying Music Royalties. If you're in the blog, you'll see a little ad for it right here, right? It's on the right side of pretty much any portion of the blog that you're in if you're an investor. If you select the button, it'll lead you to this page. It's a free download. It's a PDF download. Just leave your email. We already have your email. It's not going to change anything. This is for people who aren't already in our system. But you just, put in your email, you download it. It's all yours. It's very comprehensive. There is a table of contents, so you can skip to the chapter that you're most interested in looking for, which will include a lot of information about how royalties work, how they're distributed, how they earn money, things like that. It's a good resource. I do recommend that you download it if you haven't already, and if you have a lot of questions. I will say that I am in the process of updating this, which I hope to complete by the end of this month. And once it is updated, every investor in our system, everyone who's registered with Royalty Exchange, will be updated saying, hey, look, there's a new version of this, download it now. Or it'll be right there in the email. So either way, I recommend you check that out. And again, I will point you to the investor guides section of the blog. We have a lot of helpful guides in here that I think would be really useful to you, that, after this call, if you still have questions, your answers can be found here. So with that, I'm going to quickly switch over to the questions that were left in advance. Let me just check the Q&A real quick to make sure there's nothing about what we immediately discussed. Yes, there will be a copy of the recording made today. I will send that to everybody in the call. The blog is available all the time, and there are the links in it will also be live all the time. And yes, we are talking about streaming. Are you talking about, there's a question here about if I was talking about the mechanical rate for streaming for the new compulsory license. It's not a compulsory license. The streaming service does not have to register with the MLC if they don't want to. They can always decide to take on the hassle of finding all the people on their own if they don't want to. I don't believe that's going to happen. But yes, I am when I talk about mechanical royalty rates, the CRB rates relate to the mechanical royalty rates that will be licensed under the blanket license that the MLC administers and distributes. So there we go. So with that, I'll jump into the questions. Many questions left in advance are that basically sum up to be clarifying the difference between public performance versus mechanical royalties. I am going to take a breath and allow Rob to start with that, because if you don't know, when anyone new joins Royalty Exchange, Rob gives them the class on what are mechanical royalty rates. I'm going to stop sharing my screen. Actually, no, I'm going to switch over to a helpful little outline here. So Rob, if you can see the screen, I've got a slide up, which is, by the way, this is a slide from the Music Royalties 101 post that I just showed you. This kind of breaks down the composition copyright and the different sort of rights involved, and it shows you the difference between synchronization rights, mechanical rights, and performance rights. Rob, give me a break here, and why don't you give you a quick rundown of what those things are?
Absolutely. Thanks, Anthony. Yeah, and I guess we'll start with the fundamental piece is that when we're talking about mechanical royalties, they relate to the musical composition copyright. And like it says here on the slide, that relates to the lyrics and melody of a song. So it's the sheet music version if you know how to write sheet music. The other side is the sound recording, and that's literally the recorded version of the song that you hear. So the word mechanical comes from the fact that sheet music was reproduced in a mechanical form. So like the old player pianos, that was like the first version of a mechanical reproduction of a composition. So that's what caused the original songwriter, the original publisher to say, hey, if you're going to reproduce our written music, you need to pay us a royalty. You need to get a license for that. So that's where the mechanical license comes from. And I think Anthony got into a little bit on there's a compulsory license, which means that you can just go out, you can re-record someone's music, someone's written song. But in order to do that, you have to pay them for the right to record that. So that's where the mechanical license comes from, and that's where the mechanical royalty comes from. So what that is back in the day when you actually reproduce a physical copy of something, you had to pay the underlying songwriter and publisher 9.1 cents per song that you recorded of theirs. If you're not the original songwriter yourself, and you have to pay that regardless of whether it's actually sold or used. It's just the very fact that you've recorded it, you have to pay a mechanical royalty. Now the streaming is the vast majority of earnings these days. Is there's something called a streaming mechanical. So say a song gets streamed online, that you can kind of treat that as a micro purchase. You know, back in the day, it was you would download a song from iTunes for 99 cents, and 9.1 cents of that would have to be paid to the publisher and songwriter. Now, once you stream a song, you've created a streaming mechanical. So it's a really tiny purchase, and for all the revenue that comes in for the actual streaming of that recording, the songwriter and publisher need to be paid a royalty for that. So that's where mechanical comes from, and that's kind of how it's mostly used today. So those are different than performance rights. I know we had a couple questions on how are they different. So when we're talking about streaming, you'll have the streaming mechanical, which is the micro purchase, so that you have to pay a mechanical royalty for that actual stream. And then you have to pay a performance royalty for the fact that that song has been performed in public. So it's really two separate royalty types that are derived from one single stream. So that's kind of the distinction there. And again, these are all payable for the musical composition copyright to the songwriters and publishers of those songs.
Right. I'm actually going to skip back a couple slides here just to kind of show the broader outline. So this slide here shows how essentially a song is broken up between for royalty between the copyright. So you have a song, you have the recording of the song, and you have the writing of the song. So let's just stick to that bottom flow for a second. Bob Dylan wrote the song, right? Whenever that song is used in a movie or sold or streamed or played on the radio, the songwriter earns a royalty for the use of the song that they wrote, okay? Separately, there's a sound recording. The song that you wrote is then recorded into a master tape of some kind, right? That is a different royalty type. The difference being that one person may have written the song and a different person may record it. Okay, so in this case, I could kind of show you later, but like Knocking on Heaven's Door, Bob Dylan wrote it and he performed it. But as you know, Guns N' Roses also recorded Knocking on Heaven's Door. So the Guns N' Roses recording of that song, they earned the sound recording royalties along the way, while Bob Dylan still earns the composition royalties for that song. Okay. So anyway, that also includes synchronization rights. Sound recording includes reproduction rights, which is again when it's sold or streamed, and it allows for a limited amount of performance rights when it's played in public. Back to mechanical rights for a second. The main difference between mechanical rights and performance rights is that mechanical rights is when there is a transaction involved in some kind. And Rob, please tell me if I'm oversimplifying this. Lawyers don't like it when I generalize, but if there's a transaction involved, someone bought the song, either as an album or as a download, or a stream is considered a kind of sale, that sparks a mechanical royalty. If it's performed, if you listen to a song on the radio, the radio station's not paying a mechanical royalty for playing your song on the radio. They're paying a performance royalty for playing the song on the radio. There's no transaction involved. So those are that's generally the difference between the two. So another question here is who gets a share in the mechanical license? Does the PRO royalties equal mechanical royalties? Let me just start with that one. No. So PROs are performing rights organizations. Their job is to track and distribute the performance royalty. Okay. They're the ones, they track who is owed performance royalty rights. They collect the performance rights and they pay those to the songwriter and the publishers based on the splits, basically. Okay. Mechanical rights, as I mentioned before, originally were paid by the merchant involved in the transaction. Okay. Now with the MLC related to stream anyway, the MLC is now like a PRO, but they're like more like an MRO, mechanical rights organization. That's not really what they're called, but you could call them that. Their job is to track the mechanical royalties, who owes them and who's should be paid for them. So those are two different things. PROs are for performance royalties. The MLC is for mechanical royalties. Two separate things. Hope that helps answer that questions. And I think that's the extent of that. I'm going to quickly go to some questions that came in here. How does public performance relate to royalty exchange assets in this chart? Performance here does not include any streaming. So the questions are just to Rob, but I'm going to jump in. So when you look at a royalty exchange listing, we detail very specifically which rights are included in the asset that you're buying. Okay. Let me see if I can navigate while I'm sharing my screen to an actual example of this to make it easier for everybody. Bear with me just a second. But basically, yes, we know which one is which. So if we go to listings, I'll try to make one that's a little bit easier. Let's just go. Okay, so if you're in a listing, okay, as we are here, if you scroll down, you will see included rights. And here you can see this is a public performance royalty that you're buying. Okay, so streaming does, performance royalties are owed on streaming activity. All right, so that's one way of looking at it. So and if you look at the asset itself, we actually list right here the last 12 months earnings breakdown. It'll show from which sources that performance royalty is mostly earning: international sources versus online streaming, live, TV, film, and other. Okay, so all that's listed there in the actual listing. So that's how you could find that. So I hope that answers that question. Another question is, what are different payments made for interactive and non-interactive performances? Rob, you want to grab that one? And I think they're talking about performance royalties.
If we're still talking about the composition side, those are both going to qualify as public performance royalties because they're still both streams on the internet and public. Mm-hmm. And then if you go over to and then also a mechanical royalty as well. Now on the sound recording side, maybe that's what the question is asking is those are differentiated as far as Sound Exchange. They're an entity that collects non-interactive digital performance royalties, and those actually are sound recording royalties for performance that are paid to the sound recording owners, so the record labels, the recording artists, which is a completely different thing from the performance royalties that are paid to songwriters and publishers.
Right. And then real quick, it's not the most elegant phrasing, but it's unfortunately what the music industry uses. But interactive versus non-interactive, just to describe for those folks listening what the difference between those things. An interactive stream is you go to your Spotify subscription, you say, I want to listen to this particular song right now. I click it and I listen to it. That's an interactive stream. A non-interactive stream is when you go to, say, Pandora and you say, I want to hear rap music, and you just sort of listen to whatever random songs are popping up in your Pandora station, so to speak. That's a non-interactive stream. You did not choose a specific song. You don't have necessarily the ability to skip to the next song. It's more of a radio-like experience. That's a non-interactive stream. Okay, and they do have different royalty rates connected to them. So that's a little bit more of a granular answer for that one. And then finally, quick question on the MLC related to how the MLC may affect royalty payment schedules. I did mention this. Right now, we expect that we know the MLC will be paying the publishers and others on a monthly basis, but the schedule that the publishers then pay to the resulting artist, or in our case, the investor involved, will likely remain the same as it has been before for at least the time being. That may increase payment schedules as this gets easier and as their accounting practices evolve along with it. But the MLC literally just launched this month. I don't expect to see any real changes in terms of, I guess, last mile payment schedules for some time until this gets more incorporated industry wide. We'll let you know if those things change, but that's kind of what we expect to be the case now. So back to the questions. Stepping away from this topic for a minute. After the purchase of a catalog, are we entitled to exploit it as much as we find necessary? For the most part, no. You are not buying a controlling right in any of the songs that you purchase. You are acquiring a passive interest. You're basically investing alongside those that do have the rights to exploit those songs and like I said, the publishers and things like that. Generally, for the most part, the copyright is not included in these transactions, and without the copyright, you don't have the ability to try to get the ad placed in ads and things like that. All of that takes place outside of your ownership of it. That is actually by design, and we feel is a benefit. Most investors and folks are not in the music industry. They don't necessarily have the connections required to, make these types of licensing deals happen. they probably don't want to. It's a passive investment. You are looking, the track record that you'll see when you're in the when you're examining the listing shows you how well these folks have been exploiting the copyright, and you're investing alongside of that. I'm going to go ahead and stop sharing my screen now and go back to our live faces here. So here we go. Okay, so that's the answer to that question. Are there any investor protections in case Royalty Exchange is insolvent? Rob, take it away. We get this question every single month, so Rob's got it down by now.
Yeah. So I think the biggest protection is in the contract that is in all the royalty deals that take place on the marketplace are a one-to-one deal between the royalty owner and you, the investor. So you have a purchase agreement that entitles you to the royalties based on the time length for how the deal is listed. Royalty Exchange then becomes an intermediary, and what we do is we collect from the royalty distributor and pay those through to you. So Royalty Exchange is not involved in your ownership of the asset. We're involved in the transaction, the distribution of payments. So then if Royalty Exchange were ever to be insolvent, we have what we have is the accounting agreement that allows us to do that collection on your behalf. That also requires us to find a replacement administrator to make sure those royalty payments continue to be flowing.
All right. Thank you very much, Rob. Next question is, excuse me, are there any future private syndicate deals, and why did the last one fail to reach the funding goal? So this actually, the answer to this is going to answer a number of different questions, because there are some questions related to buying fractional investment in a song catalog. So let me quickly define what a private syndicate is. A private syndicate is basically a private placement. So in some cases, we may have a catalog that is very high value, several $1 million. Okay. And rather than putting a $3 million auction or direct listing up on the marketplace, we will split that catalog into a number of different shares or units, like around 1,000 units, let's say. All right. And each will have its own price. We will then go to our investors and say, hey, you have the ability to buy any from this minimum number of units to this maximum number of units in this particular catalog, and collectively they will then have fractional shares in that particular asset. You do need to be an accredited investor to invest in that particular type of investment, a private syndicate. Okay, that's by SEC regulation. We have no control over that, and so that's the only way that we would offer a fractional share of assets on the platform. So are there any future ones? So some investors like them, some more than others, and we don't have a lot of them. And we recently had one that didn't reach its funding goal. And the reason being is a couple. One was that it was a very short time constrained opportunity. The syndicate had a certain period of time by which we had to close it and close the deal with the sellers. And I think we probably could have gotten to that point, but unfortunately, the way that it was priced out was such that it was just taking a little bit longer to kind of get done than we had anticipated, and essentially there wasn't enough interest within the time frame available to close the full funding amount. So that's why it didn't reach its goal. In terms of any future syndicates deal, we learned something in that private syndicate process, which was what investors expect to see in terms of potential returns. Roughly speaking, basically 10% or more defensible forecasted returns is kind of what we need to aim for in order to present a private syndicate to investors in a way that they'll find attractive. We do intend to continue pursuing those types of deals. However, those larger catalogs, as you probably have seen in the news, are far more competitive with other private equity, investment funds, and others also competing to buy those catalogs. And so we have to basically make our offer limited to a point where we know that when we provide it to investors, that they would receive the return that they're looking for, that would I guess inspire them to participate. And so if we get outbid on those, then that's why, because other funds are willing to pay more and are willing to accept a lower return. And that's kind of where we are right now. That'll change as the market changes, but right now in today's day and age, with all the other funds that are out there, it's incredibly competitive, and we are being very disciplined in how we make those offers, because we also have to know that we need to pass along a certain amount of return potential to the investors on our platform who are participating. So that's the short answer to that question. there's some questions about what are the usual terms of syndicate offerings. I'll tell you what, there's another blog post on the site about what are private syndicates. You can kind of get into a little bit more. The terms are basically such that we own it for a certain, you buy it, we expect to own it for around 10 years, and we price it out based on the assumption that after 10 years, we will explore potential sale. We may do it earlier, we may do it later. There's a lot of question marks around that I don't have all the answers to right now. When we do have a private syndicate, there's always that information added to not only the listing, but we also do it in a great detail in the webinars that we hold specific to that syndicate. And those terms will be explained in greater detail within that specific syndicate offering. All right, so always a fun question. Next, what's the best way to get involved and how much money is needed to get started? Good question. The average deal size, the average sale, I guess, I just actually calculated this yesterday, is around 65,000. That's the average closing price of a catalog on our platform. That said, there are some that are much less. Generally around 10,000 is about the minimum. It's going to be, and those are actually far more competitive because there's a larger number of investors who are able to participate at that price point. So you're going to have a lot of other folks bidding in that same area as well. But that's, I would say, around our lowest, maybe sometimes lower, but very, very rarely. Like I said, the average is around 65,000. Let's see here. Another question. Can I invest as a custodian or trustee for a minor? Is title ownership defined upon purchase, or do I need a second account? Rob, I'm going to ask you to handle that one.
Yeah, of course. We don't have any issues with you doing that, investing on behalf of a minor. You might want to check with your servicer of that exact account, but you may be able to buy it individually and then assign it after the fact to that trust account. It's really, we haven't had anyone actually do it, but from our perspective, there's no issues, and we'd be happy to work with your servicer to make sure you have whatever info you need to get it done.
Okay. Next question. Can you explain how Royalty Exchange is earning money on each transaction? Yes, very simply. We are like a real estate agent. We take a percentage of the sale as a commission, basically. Anything else to add there, Rob?
We also do the investor fee if you're not an all access member.
Yes.
To close the transaction. It's usually $500 or I believe 1%.
Yeah. So yeah, I'm sorry. You're absolutely right. Thank you for reminding me of that. So yeah, so we take a percentage of the final sale that's paid by the seller. All right. And then there is a marketplace fee to investors of 1% of the closing price with the minimum of $500. And that's a one-time fee that covers the administrative costs of us administering the payments afterwards, basically. All right. So here's an interesting question. Which types of catalogs have the highest return, and any examples for that? I'm going to try to answer that question. And Dayton, you're our senior financial analyst, so you may want to jump in here a little bit as well. But in terms of what types of catalogs have the highest returns, generally speaking, and we have to be, same sort of disclaimers as always: past performance, future success, et cetera, et cetera. Generally, the older a catalog is, the more likely it is to continue earning at or around the rate that it is earning now. So that is what if all other things being equal, the dollar age of the catalog, as we call it, is probably the one thing that you want to focus on the most. In terms of return, that's a very difficult question to answer because return is kind of depends on how much you paid for it. So obviously, if you pay very little for a high dollar age, well-performing catalog, you're going to get a better return. However, sophisticated investors who are familiar with buying music royalties know that higher dollar age catalogs are more consistent, so they are willing to pay more for them. So the more you pay for the catalog, that affects your return. I'm not trying to be waffling here. I'm just saying it's a very, very difficult question to answer because it really does come down to how much you paid for the catalog. Dayton, do you have any other points you want to add to that?
Sure. Just to answer this in another way,
Sure.
To Anthony's point, the return you're getting out of the catalog is how much you pay for it. I think an important factor, if you're looking historically, and this is probably something a lot of folks on the call are already aware of, but the impact that streaming has had on the value of certain catalogs, especially older legacy catalogs in like the classic rock space, and for more recent genres like hip hop, that's really increased the value for those catalogs because you're seeing the changes in music consumption extend the tail of the earnings out, where previously you had performances and royalty payments based on radio, a limited pool of top earning tracks generating most of the income. Now you have that longer tail of listeners going to streaming platforms, consuming music there, and the value of those streaming platforms increasing over time. So I think that historically, what you'd see really driving the value for a lot of those catalogs is the growth in digital and the value of those digital performances increasing over time and the number of digital performances increasing over time.
That's great. Thank you. That's why we have you on the call, because other than the fact that we just like you, that I just, that's exactly the kind of information that we're hoping for. So thanks very much. Hopefully that answered your question. Next question. This is a sort of a list of questions. I'm not really sure how to answer most of these. So the question is basically dividend formula, question mark, tax reporting, question mark, benchmark comparison of royalties, question mark, and secondary market / resale, question mark. I'm going to just quickly try to address this a little bit. So a dividend formula, I'm not sure what that means. We don't have dividends. This isn't like a public fund where you buy it and then we pay dividends based on how it's earning. You're buying a catalog, you earn what that catalog earns. Full stop. Tax reporting. Rob, what's our what kind of tax reporting documentation do we provide?
Well, I guess just in general, you're going to get a 1099 for royalty earnings. It's considered income. So you'll get that once a year based on all the royalties that are paid out to you from Royalty Exchange.
All right, great. Then there's like a benchmark comparison of royalties. We do have a analyst benchmark price attached to everything in our market listings. They're not necessarily available on the auction house, I don't believe, but that's a view that is limited to our all access premium members for the moment. And so, it's there. The one way around it is that basically everything in the listing, if you go into a listing, you're going to see what others are bidding, whether that bid has been rejected or accepted. You could see, all past sales are public. So you can kind of get your own sort of benchmarking comparison there by how the bidding activity and how the closing prices has progressed over time if you're not an all access member. And then in terms of secondary market and resale, yes, we do have a secondary market, and yes, you can resell them. That's what the secondary market on the site is. So I think that answers those questions. Next is, do you actually own the rights for the lifetime purchases, or is it for a specific time? The answer is both. Some of our assets are called life of rights assets. Now, a copyright is not a perpetual royalty, okay? The copyright lasts for the lifetime of the last surviving author of the work plus 70 years. So it's quite a long time, but it's not absolute infinity, okay? If it's a life of rights purchase, that you own essentially the rights to that royalty stream for the life of the copyright. There are others that are shorter. There are 10-year term assets where you are essentially buying the right to collect the royalties that this asset earns for 10 years, after which the royalties then revert back to the seller. That's got a different pricing and valuation model and everything else, right? But that is available to you as well. So each one of these are clearly marked on each listing, so you know which one it is that you're reviewing. Sorry for kind of rapidly going through these, but we have a lot of questions. I want to try to get to as many of them as we can. Do you require paperwork to prove we are accredited investors to bid on a royalty auction? For auctions and for the marketplace, no. You do not need to be an accredited investor. The only time you need to be an accredited investor is if you want to participate in a private syndicate, which, as I mentioned, is rather few and far between. We do, however, have a verification process, which is basically our own direct one-to-one call. But basically, you register on the site. You're in our system. You have the ability to review the listings, et cetera, et cetera. If you want to place an offer, or if you want to make a bid on an auction, we do need to verify you. There's a verification form on the site that you need to fill out. That you need to set up a time. It's a very short phone call with our investor relations team. We just basically need to ensure that you understand what it is that you're getting involved with. This is music royalties. We do have some folks that don't quite understand what it is that we're trying to offer. They think if they bid that it's just an indication of interest, and then when they win, they're like, oh wait, I have to pay for this. And so we kind of try to go through that in advance to limit that type of activity from happening. Next question is, does BMI or PROs pay out only once a year? No, they pay out, what is BMI quarterly, Rob?
Yeah, they're quarterly. And that question is coming from that the person who asked it sees that all the information on the website shows that the most recent payment was Q1 of 2020. and that actually opens up a question I think is
Mhm.
worthwhile to answer, is that BMI and ASCAP pay on a two quarter or in arrears. So the Q1 of 2020 payment was made in Q3 in September of 2020. So then the next payment will be Q2, and that actually, I believe, happens this week. So everything you see on any of the listings will always show the most recent payment made, but just keep in mind that when you see those in arrears, those are the most recent royalty payments that have been made, and the next one will reflect the following quarter.
Cool. I'm just going to switch over to ask a couple of questions coming in through the Q&A. One is, how do you set the price on each catalog, and do you help the sellers set their prices? Kind of. I'm not really sure how to answer that. So I wouldn't say we help. There's two different ways of looking at it. When there's an auction, we talk with the seller and we explain to them how the auction process works and what the strategies are for setting an opening price and things like that. We do have some, what's the word I'm looking for? We do have some guardrails, I guess, around that. Like if someone wants to start an auction at like 20 times this last 12 months earnings, we're probably going to decline to make the effort to make that happen because it's just unrealistic. We do work with them on the auction side of that. Now, we also have the market, which is where people can just directly list their assets at any price and any multiple they want. We offer them some guidance in terms of median prices. We look at their dollar age and other components of their catalog and we say, okay, based on the characteristics of your catalog, here's how other catalogs with the same characteristics or similar characteristics at least have performed on a median basis. And here's sort of your range that we would recommend. That said, they're free to put whatever price they want. As many of you have noticed on this market, that there are some listings on there that are relatively high. Other investors like yourselves, once they acquire an asset, can relist those assets on the secondary market and try to sell them. Those prices can also be higher than many investors are comfortable paying. And so they don't have as much movement. So the point is, yes, we do offer some guidance as to generally how these assets might be priced based on marketplace activity, but it's not in any way a requirement. So that's how I'll answer that question. Another question that came in just real quick was, could you share anything about your personal investments in royalties? I don't have any personal investments in royalties. Basically, the policy here is that staff at Royalty Exchange cannot compete with our investors for the royalties on our platform. In certain cases, we are allowed to make an opening bid if there's an auction and there's no one has bid yet. If we want to make an opening bid, we can. If another investor bids against us, that's it. We're out. We can't bid anymore. We cannot bid against our investors. It is a policy here at the company, and we won't break that. So there's that one. Another quick question was, do you see any further 30-year term offerings coming? Sure. Rob, can you, I don't know, I don't have the background on this as well as I probably should. Do you have any insight as to when we would make a 30-year available? Like what are the factors that go into a 30-year term listing?
Yeah, most often that's going to be an ASCAP songwriter royalty, where ASCAP's internal policies say that if you make below a certain threshold as a songwriter, you're not allowed to assign your royalties irrevocably. So the 30-year term assignment is really mostly just a way to get a longer term for a seller who really would like to do a life of right auction or sale, but just isn't allowed to do it based on the terms of ASCAPs.
Okay. So the short answer is, yeah, we'll probably see more of those. And I understand that like a lot of investors prefer life of rights. 30-year is about as close to life of rights as we can get in order to accommodate bringing those types of assets to the platform as Rob described. Will you guys ever offer a platform to actually speak with the seller during negotiations? Can't speak to the future, but I don't think that'll be something that we would ever do. I don't really see the reason for it, to be quite honest with you. If there's questions that investors have, you could always ask. We try to put as much information into the listing that is relevant for an investment decision, but a lot of sellers prefer just not to be available in that way. So we have to respect the seller side of this as well. All right, I'm going to go back to the, I'm sorry. And for those that keep asking, yes, there is going to be a recording of this after the fact. Everyone will receive it. So back to the questions. This is a good one. Public performance rights. Do public performance rights include both international and domestic sources, and what other sources do public performance rights consist of? Short answer is yes. public performance rights does include both international and domestic sources. All the sources are basically the same between them. And I'm going to do this from memory, so Rob will gleefully tell me if I'm wrong. But basically, a public performance will include streaming, it'll include radio, it'll include music played in a live venue of some kind, which I will lump together as like a concert, but also played in the background, like at a bar or a restaurant and those types of things. And it'll include music played on television or film. Like if you're watching TV and it's in a commercial or something, all of those things are included. Did I get them all?
Yeah.
Yeah. So anyway, those are all the ways that public performance royalties will collect public performance royalty. What you see at our site when we list out the different types, you'll see international broken out separately. Something you should know is that when we say international sources include all of those sources that I just mentioned. Okay, all of them, but they are collected from international markets, like overseas. Okay. The way that it's unfortunate, but the way that the PROs work is that when they report their earnings, they don't break down international royalties in that same layer of granularity. Okay, when they just say, okay, this came from an international PRO, this is the total. They don't have, okay, it came from streaming internationally, live performances internationally, radio internationally. They don't break it down. They just say, here's all of those things lumped together into one payment, and that's your international payment. Generally, I mean, we have no insight in this because of the way it's reported, but generally, I personally assume that the breakdown of sources internationally is similar to how they are domestically. So if you're looking at the domestic breakdown and you see, like, for instance, the one that I'm looking at right now, international sources is 60% and online streaming is 30%. And then live performance is 4%, TV and films 3%. Most likely, it's probably similar in the international sources. International is probably mostly streaming, and then live, and then TV, film, and so on and so forth. It's just the way that's reported. Okay, how are this question is not, well, I can't answer this question because I don't know how to even. It doesn't make a lot of sense. So I'm going to the next one. How do I get financing to buy royalties in your auctions? Not from us. Where you get the funds to buy royalties is sort of up to you. We don't play a role in that. How do we know the best royalty to buy? A lot of it depends on your investment strategy and your investment stance. But I think we do kind of review a little bit how to value royalties. Again, going back to the blog, there's a couple of posts that say how to value and how not to overvalue royalties. And again, they break down essentially to three things. One is dollar age. The longer it's been earning royalties, the longer you can assume that it might continue to earn royalties, and that's considered to be more stable. So that's the first thing we recommend to look for. The next thing that we recommend to look for is basically a mix of source of royalties. So from what format are these royalties earning? If it's online streaming, that's considered to be where the music industry is moving towards. That has a good tailwind behind it, is expected to grow, expected to remain stable. If it's earning primarily from other sources, you want to try to take a look at how old is this song, and is this in the midst of some kind of transition. You might expect to see a newer song earning more from radio, and then around after 3 years or so, you're going to see it shifting from radio to streaming. So you want to keep an eye on the source of royalties. Okay. And the third is the trend rate, which is looking at the past 3 years. How much is the asset increasing or decreasing, basically? Dayton, you want to add anything else to those? Basically, valuation. I mean, you help us with our valuation. So anything else to add to that?
I think you basically covered it up. If we're going to go in depth on the valuations when we're doing our analysis, and you touched on this briefly, but looking to see where that money is coming from, because it's not only a fact of what's the trend over a 3-year period, but what sources of income are driving that trend. So if it's international money, as we touched on earlier in the call, we don't have quite the same level of visibility into that we would for domestic sources. We'll probably assume domestic is a proxy for how international is performing. Or if it's being driven by synchronization uses. So we might have a catalog where a writer had their songs placed in commercials, so they're seeing these giant lump sum payments. That's going to influence the trend of the prior periods, but we don't necessarily expect that might be recurring for them in case they don't get some commercials coming forward, as opposed to someone who's making most of their money from streaming or from radio sources, where that's going to be a more consistent, more recurring source of income, because that's people going to those sources to find that music, or it's people programming that music into playlists or onto radio stations.
Great. Thank you very much. Okay, keep going here. How does Royalty Exchange work to expand their market outside the US and the UK? Not really sure what that means. We are based in the US. We are not going to have, we don't have any offices in other countries, but that doesn't mean that our market is not available there. Basically, anybody in any country can come to the Royalty Exchange and bid. We have investors from all over the world. In terms of the sell side, people who earn royalties in other countries generally are also on the marketplace. The thing that the factor is whether or not we can work with either the publisher or the performing arts organization in that country to agree to split the royalty stream from the artist to the investor. So long as they agree to do so, we can do that. And we work on that regularly. We are having calls with PROs in other countries almost weekly. It's just a matter of working with them, getting them understand how it works. It is an administrative burden to a certain extent on their end. So we just need to work with them to set up whatever processes might be necessary to make that easier for them. But I'm not going to list all the countries that we take royalties from right now, because frankly, I don't remember what they all are. Dayton, you're welcome to jump in if you happen to know what those are, but maybe you don't. But we got to be in. I mean, we've done them in France, England, Sweden, I think Germany. I don't know. You want to?
Japan.
Yeah, I
South
was actually just
Korea.
looking at I was just looking at some data for STIM, the Swedish PRO, the other day. I mean, it's expanding the business into other territories. The money that comes from performances in a given territory are going to flow to the rights holder regardless of where they are. So if they're in the US, you're going to be getting paid money from any performances that happen anywhere in Europe, in Asia. So it's all going to come here. And to Anthony's point, I think it's largely a function of whether or not the rules of the society, the publisher, are going to allow for third-party assignment that would accommodate the kind of royalty exchange transaction.
Okay, thank you. Moving on, how have acquisition multiples changed over the last 12 months? Good question. We are due to do that kind of an analysis. In fact, I may have to have a call with Dayton after this call at some point in the next week to kind of look exactly that. Generally, what we try to do is every 6 months, we try to take a look at the marketplace activity and do some kind of an analysis and say, okay, here's what the returns that we're seeing, here's sort of the multiples, et cetera, et cetera. As we have those, we do publish them, but I don't have a firm answer for that right now. I think multiples have, I'm speaking anecdotally now, generally they've gone up a bit on average just because of the competition that's increasing in the marketplace right now. That said, averages mean almost nothing because there's such a wide variety of catalogs on the marketplace that it really depends on the catalog itself. The average multiple for a 3-year-old song is going to be different than the average multiple for a 12-year-old song. So in order to do that, we have to kind of break down dollar age and multiples for dollar age, and it's actually quite a heavy lift. We will do it, but I just don't have the answer to that question at the moment. All right, let's see here. How is the exact amount of mechanical royalties due to record companies, artists, producers, publishers, and writers determined? By the Copyright Royalty Board, I believe. Correct, Rob?
Yeah, and just to clarify, the mechanical royalties are only paid to songwriters and
Thank you.
publishers,
Right.
labels and artists.
Right, exactly. So it's basically, the Copyright Royalty Board determines the mechanical royalty rate. The songwriter and the publisher have a contract that determines how much the publisher keeps and how much the songwriter keeps. Generally, that's 50-50. All right, so how much money should I start out with if I'm new to this? Well, like I said, our average sale or average catalog closing price is 65,000. You can see them go around as low as 10. I would say if you don't have at least 10,000, you may have a hard time acquiring royalties on the platform. Tech royalties is the questions. How do I buy tech royalties? We haven't really done a lot of tech royalties or any that I know of. We do occasionally do royalties outside of music. We have had some in the movie category. We've done some like sale, contract and sale royalties, like the Listerine auction and whatnot. Those, anything outside of music, we will examine and look at on a case-by-case basis as they come into us. They're kind of opportunistic. We're not necessarily pursuing them. Our focus is on pursuing the music market, mainly because there's a lot more of it. That'll offer a lot more deal flow for investors in the platform, and there's a more established system for splitting the royalties with a buyer after the sale than there is in those other areas. The other areas take a lot more effort to bring to market, and there's just frankly not as many of them. Let's see here. Some of these questions are a little bit hard to decipher, so I'm going to skip past them and move to how do you model predict future cash flows based on past cash flows since material popularity changes over time? Well, I mean, we don't predict future cash flows, but I'll just gonna always point back to the dollar age. You know, the basically way we look at with music royalties is that when a song is first released, it's generally got about a 3-year retail window of its main earnings. Okay, so you're going to see a lot of income coming in the first 3 years after a song is released, after which that will fall. Okay, almost inevitably. And then what we like to do is the longer you have the opportunity to review earnings after that 3-year initial window, the better you can kind of get a sense of what its plateau or what its more regular royalty expectation might be. So if you have 6 years to examine, that's better. If you have 10 years to examine, that's even better. So it's basically based on how much previous earnings you have a chance to take a look at, and again, the sources from which those earnings are coming. Those are the two areas that we kind of focus on in terms of modeling. Dayton, again, I know you do some of our projected cash flows for some of the bigger catalogs and things like that. Does that pretty much sum it up? Is there anything else that people should look for?
No, and I think that we've covered a lot of those points earlier in the call
Okay,
too.
good.
Yeah.
Let's see. How to permanently own what I buy? You basically, when you buy the assets on the platform, you're owning them for the term as listed on the listing. How will change? Okay, that's another question that doesn't make any sense. If someone is deceased after purchasing the rights to a song, can those rights be inherited? All right, I'm an investor. I buy a royalty. I pass away. Does my family get the rights to that instead? I believe it depends on how you've handled your estate. Yes.
Sure.
Okay. Easy one. This is a great question. I've been looking forward to getting this one all day. Liquid markets tend to understate correlation to traditional assets. Can you discuss why that is or is not the case here? Great question. We've always said that music royalties are an uncorrelated asset compared to traditional markets, and we stand by that. The fundamentals of music royalties are different than the fundamentals of other types of illiquid or uncorrelated assets, okay? The reason that music royalties are considered uncorrelated is because the way they make money is fundamentally different than the way that other assets that you're looking at, like on the stock market, make money. It makes money based on royalty payments. Royalty payments are set rates. Stock market crashes, the rate that a streaming service has to pay to stream a song on its service remains the same. That's uncorrelated. Okay. The value of that, how much you pay for it, may change based on investor sentiment, but the underlying economics behind the royalty remains constant. That's what makes it uncorrelated. And what we've seen is particularly, and I'd love to do a study on this at some point, but like what we saw this year during the pandemic and the shutdown and everything else, I think we all know that the shutdown early on in March, caused some, major disruption in public markets. And there was a very, very short dip in streaming activity just for a moment during the lockdown, but it bounced back very quickly and maintained, in fact, grew quite a bit. So the idea that, if the economy's bad, people are going to stop paying for their Spotify subscription so far hasn't been the case. Now I can't, predict what's going to happen, what's not going to happen, but that's what we've seen so far. A $10 a month Spotify subscription, is a little different than, a car lease or something like that. So anyway, so the reason it's uncorrelated is basically based on the underlying fundamentals of how the asset earns, not, whether it's something you have to check the price of every day on the stock market. All right, let's see here. We got quite a few questions left. What has been the biggest learning lessons for you and the Royalty Exchange team in terms of investing in music royalties? That's an excellent question. Rob and I are two of the more earliest employees here at the company. I'd say, and Rob, please correct me or have your own opinion here if you do, but I think that the modeling that we've done around dollar age is probably the biggest takeaway that we've created early on. I think both us as a platform as well as the investors that were initially involved probably didn't really know the best way to value music royalties. We would look at them, we'd put them up there and we'd say, hey, let's see how the market reacts, right? And what we found is that dollar age, particularly monitoring the payments of royalties after acquisition on the platform, is that dollar age is the hands down number one indicator of whether a royalty can be expected to continue earning royalties or not. I think that's been our biggest lesson learned. Not to sit here and pimp dollar age over and over again, but it truly is, I think, the biggest takeaway that we've had as a platform. Rob, do you have anything you want to throw in there?
Yeah, no, and I think we've also learned a lot about sources and trends as far as those goes. You know, I think early on, it was basically anytime you valued a catalog, you just looked at what it had earned in the past on a large picture. I didn't really dig into the granular, like, okay, so what's actually driving this these earnings? And I think that's been a big learning piece for us as well.
Right. A couple of other questions about mechanical royalties. Is an ASCAP listing always a mechanical royalty? No. An ASCAP listing is always a public performance listing. Okay. Mechanical royalties would be if it's a publishing publishing catalog. It'll be mechanical, sync, and to a certain extent performance. ASCAP, BMI, those are PROs. They only distribute performance royalties. The next question is the mechanical royalty rate going up to 0.27 cents? I don't know. I couldn't tell you. I know the percentages of what, like I said, the CRB royalty rates mentioned the percent of income that streaming services need to pay, from 10%, 10.5% up to, I forgot what, I think it's 15.1% in 2022. Should those rates remain? That's the data that I have in front of me. I don't have the cent, the calculation here. Is the percentage of royalties being sold in proportion to the whole amount mentioned?
Yeah, so I think that question is asking, so what percentage of the song am I buying in this auction? And we don't list that, and it's for a few reasons, but I think the biggest one is probably if we're selling a catalog of songs, the songwriter is likely going to have a different songwriting percentage on each one of those songs. So it gets really bulky and cumbersome and frankly confusing to investors if we try to list out what all those percentages are.
Right. And I'm going to quickly switch over to some of the Q&A ones that came in while we're on the call. Can a holder place any type of asset on the marketplace? How does one place an asset purchased on Royalty Exchange in the market? So if you bought an asset on Royalty Exchange, so long, and Rob, jump in here because I know this is evolving, but so long as it's a public performance royalty that is paid by ASCAP or BMI, it will automatically be added to the secondary market for other investors to make you an offer on. If you want to actively try to sell it, we recommend setting a list price, which sort of indicates that you are interested in selling at that price, because someone meets that list price, it'll automatically make a sale connection. We are expanding that to certain types of publishing, and I'm not 100% clear on which ones that is. Rob, can you maybe jump in?
Yeah, I guess we haven't fully built that out yet, so we're not announcing exactly which ones we're going to do yet. But right now, if it's ASCAP or BMI, then that really what that does is gives us the ability to automatically receive updates every time a payment comes in, which means your asset can sit on the secondary market without having to do any manual changes. So those two sources can come directly to the secondary market. Now, if you buy something else in an auction, then you can auction that on the auction house if you want to resell that asset. And so it's either you can direct list it if it's eligible, otherwise we can go the auction route.
Okay. And that actually flows into the next question here left, which is that if someone was interested in buying past previously listed catalogs, how would they go about contacting the winner? Basically, it's done through our platform. So the secondary market is primarily populated by assets owned by other investors who have bought on our marketplace. And that is the platform through which you can make offers. What percent of assets in the platform are sound recordings? I don't know. That's a good question.
Yeah, it's got to be
minority.
Less than 10%.
Yeah,
be less than 10%. I would say.
That may change. We've got some things working. We're going to include more of that coming soon, and so stay tuned. But right now, it is relatively lower. How are royalties depreciated? Similar to real estate, is there a blog post somewhere that covers that topic? There is not a blog post, but there's going to be. Typically, one of the things that we've done for our all access members is that we send them a monthly insights article that kind of digs a little bit deeper into some of the issues related to music royalties, marketplace analysis, industry trends, et cetera, et cetera. A couple of years ago, we did one around tax treatment, and particularly around how to amortize a depreciating asset of a royalty, similar to how you might with the real estate investment. One of the things that I'm starting to do is I'm going to start surfacing the older insights articles that all access members have already received, and start adding at least summarized versions of them to the website for all to read, and that will be early on the list. We are not tax experts, we are not tax accountants, we are not tax advisors, so when it comes to tax treatment, it gets a little bit touchy in terms of what we are sort of comfortable discussing. But short answer is that there is a way to depreciate a royalty over a 10-year period, similar that you would in a real estate transaction, and pay taxes accordingly. I'd say stay tuned, and there will be in our regular marketplace updates, when that article goes live, we will include it in that format. I always love the questions, Charles. I got to tell you, I'm not going to answer that. We have an investor who likes to poke fun at us while we're doing these things live, and I appreciate the comedic relief. All right, is there a how-to guide for new investors? Yes, I did point to that earlier. Again, it's the ultimate guide to buying music royalties. It is on our site. You can download it. I highly recommend it, and there is a new one coming. Is there a way to get additional insight into historic royalties as well as further breakdown of the international revenue? I'm not sure. Not for the further breakdown for international. No, that's just how it comes in. In terms of additional insight in historic royalties, we have what's on the listing, and there's also a raw data file. If you click that, you can download a Excel spreadsheet with all of the data that we have that goes beyond the charts that are in the listing. Let's see. There's a lot of, please describe what options are available in terms of financial investing, purchasing full auction, secondary market, partial. Okay, great question. So yes, basically the way to use a royalty exchange marketplace is there is the auction house, which is where, live auctions, you bid until time is up, winning bidder collects all. That's the auction house, full auctions. There's also what we launched as the secondary market, which was initially created to allow investors to make offers to other investors who previously acquired assets on the platform. That's the secondary market. We're probably going to rename that to just the market because we have since in the last 3 or 4 months added the ability for artists to directly list their catalogs rather than on an auction, but to list it to the secondary market, which doesn't really make it secondary any longer, hence the potential name change. But the idea is that there are direct listings on the platform where an artist who wants to sell it just wants to set their own price. They don't want to deal with an auction and the uncertainty of where that might be. They say, here's my asset, here's how it earns, here's what I want for it. You can make them an offer below that and they might accept it, and they have, and other times they haven't, but that's the other way, is the secondary market. The third, again, is the private syndicates, which are much more rare, and that would allow you to buy a partial share of a catalog, but you do need to be a accredited investor to participate. Let's see. Wow, moving on. Let's see. Links on how a new investor can get started and what the best first investment might be. The links I showed you guys earlier in the call. You go to the blog, go to investor resources. There's guides, investing news, replays of past Q&As like this and whatnot. You can't go wrong. Any upcoming changes? Well, the thing about upcoming changes is that they're upcoming, and until they are actual, we don't really talk about them. I promise you that as we have changes added to the platform, you guys will all be notified. I usually include them in the marketplace update email that we send out every week. And on the blog, of course, there is a archived version of that under company news. What are the next steps after buying song rights? Collect your money. There's really nothing, again, it's a passive investment. There's nothing you need to do. There's nothing you really should do. How does the royalty collection process work? Again, when you're acquiring the asset, we kind of list the distributor of that asset. The distributor is the one who collects the royalties and distributes them to you. We help administer that process to you. You don't need to do anything. And are there any citizenship requirements? No, there are not. Let's see. What happens if Royalty Exchange decides to stop facilitating royalty transactions? Rob answered that question earlier. What if an artist is fighting for their royalties back? That's an interesting question. There's different ways of interpreting that. In terms of if you were to buy a royalty stream from an artist who then afterwards tries to fight to get their royalties back, they can't really. Rob, you want to address that?
Yeah, I mean, the way the transaction works is once the auction happens, you sign a purchase agreement with the asset owner that assigns those royalties to you. So you're the rightful owner. It's documented via contract. So you have the contract saying that you own the royalties.
Okay, great. And in terms of there are other situations happening where artists are trying to get the royalties back from, say, the label. There's a rights reversion activities between songwriters and publishers and things like that. That takes place sort of outside of us. That takes place separately. if there is at any point an asset that is brought to the platform that might be affected by those types of activities, we adjust the terms of the sale accordingly. So for instance, if there's a catalog, it's a publishing catalog that's listed on the marketplace where a publisher is selling their share and the artist might fight to get that publisher's share back to them, that could only happen within a certain time frame, and we would list the asset such that the length of the investment would only be up and to the point where the artist could potentially get those assets returned to them. So in other words, you wouldn't be able to buy an asset that in the middle of your investment, the artist would suddenly take their rights back and you would lose out. There's a set in law time period by when an artist could potentially do that. And we would not list the term of an asset past the point where that was possible. Let's see. When buying a song, how are the royalties distributed to the new song owner? We've addressed that. We work with the distributor to forward those payments to you, and we act as the administrator on your behalf. Also, is there a duration period for ownership? We address that as well in terms of the different terms. It could be life of the copyright or 10 years generally. Will royalties be bundled in the future? Performance, mechanical, and sync. They are bundled now. In fact, the auction that is on, I believe, let me just make sure I'm not talking completely out of school here, but I believe an auction right now is both, right? Yeah, so the current auction that's up right now for Tiny Tempa is actually a mix of songwriter and publishing shares. So we do that. We do that regularly. Will there be a greater volume in auction listings, or is the direct market the way of the future? Excellent question. I have no idea. It kind of depends, right? It really depends on what the seller's preference is. We offer different preferences to sellers and they pick the path that they want. Lately, since we have introduced direct listings as a new option, we have been seeing more incoming sellers opt for a direct listing because it offers them greater control. However, there are benefits to an auction that they may not initially realize, that I think as this evolves and as they see the different options available to them, they may switch back to auctions again. I would imagine that for certain, what's the word I'm looking for? Sort of like premier catalogs that an auction might be the way to go. Like there's certain catalogs where an auction event could really benefit them. And if we explain that to them well enough, they would see the value in doing so. For a lot of just, real basic, okay, here's what it is. It's real simple. It's a 10-year term, boom, boom, boom. Then a direct listing might be a little bit easier for everybody, quite frankly. So the point is that we are expanding the platform. We are expanding options for both investors and sellers, and how that shakes out really depends on the market, not really us. We're not going to artificially try to point people one direction or another. Have we ever considered going public as a company? Not recently. I don't think that's anything that we're looking at doing anytime immediately. And in terms of open to fractional music shares, again, those are for private syndicates. Just so people understand, fractional shares and catalogs becomes a security that then opens us up to regulation from the SEC under securitization regulations. That's incredibly complicated and expensive. And that's why we offer what we offer to investors the way we do it now. Those are all the questions that we're left in advance. I know we're over, but we always promise we're going to answer all questions. So we're going to jump into the ones left live here, guys. Real quickly, can earnings history beyond 3 years be provided or found? Yes, that is in the raw data file, as we mentioned before. So if you look into the listing, there's a raw data file, you can select that, you download the Excel spreadsheet, you can see everything. Those are available to everybody in auctions. I believe at the moment that's actually limited to all access investors for secondary market listings. That may change, but that's the way it is now. Will music royalties and royalties in general become more difficult to attain in the future with increased competition? Potentially. One thing to note about the competition that we're seeing out there, and I want to emphasize this point, which is that most of the competition we're seeing in the marketplace is amongst these sort of well-heeled funds, the Hipgnosises, the Roundhills and whatnot. They have raised a lot of money, hundreds of millions, and they're looking to deploy that capital in large chunks, 10, 20, 30 million, 100 million at a time. Now, the catalogs that are out there that can command that high of a price are far fewer. the number of artists and songwriters who own those catalogs that are open to considering a sale condenses that even further. So what you're seeing, a lot of the discussion in terms of all the competition and the increase in multiples and so on and so forth is really limited to that really top 1% of the catalog marketplace that's out there. And those big boys are basically kicking each other in the teeth trying to get access to those catalogs. But it's for a very, very small part of the tip of that iceberg. We operate, I would say, below that. I'm not sure how many catalog sales took place last year at that top part of the market. I'm going to say, let's call it 20 to 30, just to be generous. Probably 20 or 30 big catalog sales, some of which you saw in the press, some of which you didn't. We did, I think, around 250 transactions in our marketplace last year. So we operate in a different level. So yes, there is more competition for even the area of the market that we operate in, but it's not anywhere near the kind of scarcity and competition that you're seeing at that 10, 20, 30 plus $1 million level. So I think that's worth noting. Will you set up the service so that more people can buy rights together? Again, that's securitization. That opens us up to a lot more regulations and whatnot. So outside of private syndicates, probably not. Do we do valuations on catalogs? Yes, that's what Dayton does. Without that, he wouldn't be on the call right now. So yes, we do. We do them for the seller as part of the inborn process of putting it onto the marketplace, and the results of those analysis is always in the listing itself. Correct, Dayton? Anything else?
Nope, that's it.
All right, cool. For those of you saying you got to go and thank you, you're already gone, but you're welcome. Given how fast streaming has been growing, why are the individual catalogs not growing or growing faster? When paid streaming growth slows down, won't these catalogs decline at a faster clip? Interesting question. So there's a couple ways to answer that. So first of all, when you say how fast streaming has been growing, there's different ways of interpreting that, right? There's the growth of overall subscribers, which in my opinion is the only thing worth looking at, versus the growth of streaming activity, which is how many songs are actually streaming on a regular basis. Those are two completely different things, okay? I look, again, it doesn't really matter how many streams took place last year, all right? That's not important. What's important is how many people are streaming the catalog that you own, okay? What's more is how many people have subscribed to streaming service platforms. I'm going to be very brief with this, and I apologize because of time, but basically the way that streaming economics work is that Spotify collects X dollar amount of subscription revenue in a year. They take that bucket, that pie, and they split it based on everyone who had a song streamed over the course of the time frame, based on what their market share is. So that's what matters. If you pay $10 a month for Spotify and you only listen to Fleetwood Mac that month, Fleetwood Mac does not get your entire $10. They get whatever percentage of your $10 that they earned across the board over the entire service. So that's what you need to kind of take a look at. When you say individual catalogs not growing or growing faster, not sure what that means. I don't know if that means the sale price on our marketplace, or if that means the amount that they have earned. Again, it's good. What's happening on streaming across the board versus what's happening to an individual catalog is going to be completely different from catalog to catalog. Okay, it's going to be completely different. So you can't say, oh, streaming services grew 20% last year, so every single catalog in the world is going to also should expect to grow by 20%. Absolutely not the case. That's why you want to examine on the listings on our site what their past performance has been, okay? Because that is really what's more relevant. Rob, can I use a European bank account for royalty income?
Yeah, you can. You'll just have to give us a W-8, and we, depending on the tax treaty between the U.S. and your country, we may have to withhold a certain percentage of the royalties, but that would be based on wherever you live.
Okay, I'm going to make this the last question. Which is, by the way, the last question. So if you have any more, don't type them in. We're gonna have to bring this to a close. But the question is, do you have any plans for giving buyers more information on each right, like streaming numbers, etc.? I don't know. Certainly, I love the ability to add more information to the listings. It's just a matter of what is relevant and what's accessible. I don't know. I know there is some work to try to get a better sense of individual streaming numbers for songs. I'm not sure what visibility we have into that. A lot of that information is not publicly available. So we'll see. I just don't know. It's a good idea. I certainly support it. It's just a matter of where that sits in our stack. But I think I would say that if you were to look at our listings next year compared to what they look like today, I would imagine they would change and probably increase in detail somewhat. So there's that. All right. So everyone, thank you very much. The majority of you hung in there with us for the whole call. This was probably one of our longer ones, but we had the most questions. I appreciate it. Must be the new year. Everyone's decided their New Year's resolution is to learn Royalty Exchange better, which I fully support. There will be a recording of this that we will send out later today. Look forward in the marketplace update. And if you ever have any questions, please send them to investors@royaltyexchange.com. We will be more than happy to address them. Thank you very much. Thank you, Rob. Thank you, Dayton. Everyone have yourselves a good day. Bye now.
Thanks, y'all.
Thanks.